Will they, won't they? That's really the only question in the oil market for the coming week. We have seen the anticipation ahead of the meeting in Algiers heat up as we approach the date. There is obviously in the market an expectation or a hope that the OPEC for a change would actually exchange words with action. We could also argue that the market actually needs this at this stage, given that we've just over the past week seen news that Nigeria, Libya and Russia have increased production potentially by a combined 800,000 barrels a day throughout September. This is obviously adding additional pressure to the supply glut that has been persistent now for the past couple of years. We have seen a strong week overall. Crude oil is up, and some of that has been in anticipation of a potential deal being reached. We have seen that following a couple of days meeting in Vienna, Saudi Arabia and Iran seems to have reached, or at least Saudi Arabia has proposed a suggestion to Iran that they would cut production if Iranians agree to freeze production. This is a bit of a cat and mouse game because Saudi Arabia does always reduce production from July till December, on average by around 300,000 barrels over the past few years. They ramp up production during the summer to meet domestic demand and then slow production as we head into the autumn. So for them it's a bit of a cheap offer because they will cut production anyway. So the big question really at this stage is whether Iran, who has just come out of sanction, who has reached a daily production above 3 million but who wants to aim for 4 million, whether they're prepared to freeze production at this stage. This is really the two major names to look at as we head into this next meeting. If we look at the risk in the market, I think it is skewed to the downside. If we should see a deal, we also have to remember that the 800,000 barrels I just mentioned, so a deal in terms of a cut has to be quite substantial in order really to give the market a big lift. So I think if we should see a cut, we may see some speculative traders rush into long positions. It may take Brent crude back above $50, but I think at this stage that remains the limitation for how far it can go. On the other hand, if we should see another failure, just like we saw back in Doha in April and several times in recent years, then there is a risk that Brent crude could fall below 45, which has been offering support in recent weeks, and drop all the way back down towards the 40 area. So the risk reward at this moment, in my opinion, seems skewed to the downside. But no doubt this will be the only focus in town coming over the coming days. So we'll have to see what happens.